Howdy you guys. One thing that I noticed that a lot of you guys don't see on my YouTube is actually every single trade. I'll specifically talk about, certain trades, and I'll sometimes, share my reactions on certain trades, but you guys won't actually get every single trade. So I wanted to come on here and give you guys a weekly breakdown of every single trade that happened this week. This week consists of February 2nd all the way to February 6th. And this week was a pretty crazy week. It was a pretty fun week, really profitable. So I wanted to show you guys, the big wins, but also, the big losses that we take, as well as, the ups and downs of what options trading is like, the inherent risks that are affected with it, as long as with, how my model affects decision making and how that decision gets portrayed on a chart, but how the option contract that I'm actually trading doesn't always follow the chart. So without further ado, let's get started. So we're currently on the SPY on a 5-minute time frame with the weekly VWAP showing, and I can honestly turn the 9 and 20 EMAs off just because it's not really that important to us. Highlighted here are, the trade that I took, the 2-hour binary option trade with no fixed outcome. And I got a comment the other day, I forget which platform, but it was binary is gambling. And I'm like, yes, binary trading is gambling, but this isn't binary. It is binary in the sense that, we exit and enter on a fixed time frame, but the actual outcome isn't fixed. If you actually know what binary trading is, it's basically roulette, but the payout isn't double. The payout's actually just like 0.95 of like 95% profit, and the loss is 100. So it's very, I don't know, that's gambling because there's not really any direction, but this is no fixed outcome. So the maximum loss is still only 100%, but the maximum win is, as of right now, the model's seen an 800% win this past couple weeks. So that's the whole entire idea. So if you ever see a comment that says binary is gambling, defend me a little bit because, I'm trying to justify myself right now. But going into this, we see a couple things. This was a winning trade. We ended up taking a 473% win on Monday, the 2nd of February. Our model gave us a 52.63% chance to go up, and we turned $34 contracts into $195 contracts. Now, for those that know my strategy, 52.63% chances are below our 60% threshold for not having to go to a weekly VWAP. So usually when I get a probability that's under 60%, we go to the weekly VWAP and we do a retraction back down to the mean if it's further outside the deviation bands. This one was below our 60% threshold, but today was Monday at this time. And for those that don't know about Mondays are the start of the new weekly VWAP. So you can't really give a guide to it. You could go off, the previous Friday, in which it would still favor us to take calls. But most of the times on Mondays, if we're below our 60%, I usually just end up rolling with the probability, mainly because that post-market time from the back end of Friday all the way to the start end of Monday, a lot can happen, and just a week's worth of VWAP on the previous day, a lot can change in Wall Street's decisions and buyers' decisions over those weekends. So lots of the times I just go with the probability. So we ended up taking calls, and it ended up panning out absolutely fabulous, 473%. This is one of those trades where it's like you really need to hit these. This was 2 days after we ended up taking our 806% win. So we were definitely, on a hot streak at this point. This was the defining moment of the hot streak. And we moved forward. Option contracts topped out at, 1 o'clock. And if I were to hold till 1 o'clock, I think would have made, an extra 200% on these contracts. But am I seriously going to sit here and complain about 473%? No. That's just dumb. I've been complaining about, making money, clicking buttons on a laptop and phone are, stupid and useless. So, take our wins and, roll with them, and we go into the next day. Going into Tuesday the 3rd, this was a pretty gnarly day. We had a small gap to the upside. We had a 54.55% chance to go to the down. So we go to a weekly VWAP. We're above the weekly VWAP mean, which, gives us the retraction to go down, but we're also still inside the first deviation, so I didn't know how strong it was going to be. And boy, oh boy, this was an absolute doomsday for the markets, but we're on the other end of the side of it. We turned $30 contracts into $204 contracts, 580% win. This was huge. I didn't actually end up catching what these contracts were worth. Actually, let me see. I didn't end up actually catching what these contracts were worth at the bottom of this, but you know, at 2 o'clock, I would assume that these $200 contracts were worth thousands of dollars, which is gnarly to me, but that's the option contracts realm. But this was, you know, this was a fever dream right here. 580% following 470%. This was an absolute, you know, dream for me, because at this point we have $170 in profit here. We have $150 profit, $150 in profit here. So we've already rolled in nearly $300 in profit in just 2 days. You know, assuming that our average win stays at 58%, that covers the whole entire month, which is pretty insane. So if you were to lose on average, you know, your normal average and loss, the whole entire rest of the month, you would be break even essentially. So this was really nice to see. A huge win following a huge win. It was good to see. And, you know, prior to the 2 days that we had wins, we were on, you know, a pretty bad losing streak. In the past 10 days, we only had 1 win, 2 wins or maybe. And so it wasn't, you know, we were due, as some gamblers would say. The funny part about this is that it's a 2-hour binary option trade. That's the trade that the model takes. And when it comes to trading actually on my own personal account, you use the model as a tool. So honestly, there's probably an indicator out there that could have told me, hey, you're probably fine with staying in these contracts all the way until 2 o'clock. And you know, someone out there, because I know someone out there did it, and someone on Twitter probably has it, someone on Reddit probably has it, Wall Street Bets, where they took puts and they held all the way until 2 o'clock, and they could have turned $30 contracts into $1,500 contracts. What an insane trade. Someone made that, you know, and I can't really do much to here. I can't get mad at that. And I think if you're a trader and you're gonna get mad at that and you'll be like, oh, gambled, you know, you hit once, hit lucky, whatever. Dude, that's sick. You turned $30 into $1,500 in, you know, 6 hours doing nothing, sitting on a laptop clicking buttons. That's someone's dream job right there. It's, you know, it's the wonderful, you know, fascination that people have in the markets is that, you know, money moves in crazy ways, and this is one of those ways you can do it. So this was a crazy win. Super happy about it. Yeah, can't really say much about this. Going into Wednesday the 4th, this was a funny day. Funny day. We had a 54.84% chance to go down. You know, below our 60% threshold, so we go to the weekly VWAP, and we're inside the first deviation. This is where I go with the probabilities. We're inside the first deviation. The first deviation is actually really large, as you can see. But following the massive downturn that we had yesterday, I was assuming that we're going to have a lot of volume going somewhere. That's why this VWAP band is so large. We end up rolling with the probabilities on these because we're inside the first deviation of weekly VWAP bands. And so we bought opening contracts at $29, and market actually went down. If you actually measure this, you could see that markets actually went down at close 3.17 strikes. So 3 strikes went down, but because of how much chop there was in this thing, you know, you see at 10 o'clock Eastern time, we probably were up a lot. And then as soon as 10:30 came around, we're down. And then 10:35, we're up. You know, 11 o'clock, we're back up. And then as soon as the 11:30 bell hit, we lost contract value. This is the inherent Greeks and option contracts that people need to understand. And here's the thing. I'm going to make a TikTok video about this, and I'm going to make an Instagram video about this, and there's going to be a comedic bit where I'm just like, how in the world is this not a winning trade? How in the world are you going to lose money on this trade? It's like, I love options, but damn, what the hell is this? The Greeks, theta. What is theta? Theta is the decay of option contracts while they're expiring. Option contracts have an expiration date. That changes a lot of things. If the expiration date hits, that contract is worth nothing if it's outside the money and you don't exercise it. But because it's about to expire, it's really volatile. So that's why I trade it. If you're option contract, expires, it's worth nothing. And when we buy out of the money contracts at $30, a lot of the time, if you don't get rid of them, they're going to expire. So that's why we trade them. If a option trade, especially at the 0 day till expiration level, does not have a definitive move to the downside and it's making its decision in a lot of chop, it's going to lose contract value whether or not the outcome of that chop is the direction that you want to be. If these contracts slowly move to the downside, we probably would have made 50%, 70%. But because it was chopping to the upside, chopping to the downside, and back to the upside, and back to the downside, and so on and so forth, we lost value on it. Now, a 10% loss. If you're going to take any loss on these options, this is a good loss. And it's a great metric for the model to have such a slight edge to go to the downside, but it actually did end up going down. At the end of the day, my model was correct. We went down within the first 2 hours of market opening. Did contract value go up? No. But that's not what the model's predicting. The model's predicting if the S&P 500, the conglomerate of the top 500 companies in the American stock market, are going to go down. And guess what? It did exactly that. Even though it was 54.84% chance, the markets went down. So are you really going to count me at fault for this? Yes, but no. This was a funny day. I made an Instagram reel about it, and I don't post my Instagram reels on my public profile. I post trial reels because I'm scared of public humiliation. Someone can bully me in the comments for that all they want, because I'm not, I don't have the balls to be a content creator just yet. But I posted that trial reel a couple days ago, and it's at like 13,000 views right now. For those that don't know, I have less than 1,000 followers on Instagram, and it's a trial reel. So the fact that this thing has 13,000 views right now, could be more in the future, kind of crazy. So yeah, we'll see how that goes. If that thing pops off, I'm gonna have to actually force myself to post that thing, because it's a lot of views. 13,000 people saw me complaining about this, and it was one of those ones where I looked clueless, and so I kind of rage baited the comments, and they're like, oh, why did this thing not be a profitable trade? I know exactly why it wasn't a profitable trade, but people don't know that I do know. So people commented, oh, Greeks data, you're stupid, why did this not go down? Because you're dumb and you don't know how option contracts works. I do know how they work. Just chill out. I do know how they work. Moving on to the next day, because I'm tired of this. Oh shoot, I messed that up. All right, Thursday, February 5th. This was, loser day. Had a large gap to the downside. Model posted a 61.9% chance to go up. We're outside the second deviation of weekly VWAP, but we don't even have to look at that. We were going to go with the probabilities no matter what, because we're above our 60% threshold. We bought opening call contracts for $29 a piece, and they ended up turning into $5 contracts. Booked an 82% loss on the trade. And this is just, your plain and simple loss. I can't really explain any of this. I don't really have a justified answer for, why I was wrong. Because here's the thing, the model said we're going up, the 40% probability that we would go down. It happened. And honestly, I'm pretty confident, not 90, but I'm pretty confident that if you were to get put contracts, you actually would have been unprofitable as well, because of this last 20-minute spike to the upside probably killed a lot of contract value. So I think these are one of the days where, options just aren't profitable on a 2-hour scale. And if you look at it, we really just went sideways. Marketing open to market close only went up, or only moved 3 strikes, which just isn't profitable in the 0 day to expiration option contract realm. Both sides, calls and puts, would not have been profitable on these. So, this is just one of those days where this is one of those days to ignore. Calls were, got smoked, puts got smoked. Yeah, I don't have an excuse for this. You can flame in the comments for all you want on these. I don't have an excuse for this. I lost this trade. This is where my model's inaccuracies come into play, and I'm not going to be profitable every single time. I only actually have my win rate is only 35 point something percent. So I actually post a lot of losses, but the wins, when they hit big. They're big enough to where I become profitable. Fight me on that one. As of right now, I'm 160 days through. I'm profitable. Shut up. Next day, February 6th, Friday. This was yeah, this was a fun day. Posted a 66.7% chance to go up on the model. No need to look at the weekly VWAP, but if we did, we would have still taken it because we're outside of the first deviation of lower VWAP bands. Turned $28 contracts into $49 contracts. That's 75% in profit. Here's the thing. As you can see, market just, was an up day. It was a fabulous day. I think the S&P went up 1.8% off of its, recent lows. This was, just a win-win. 75%, it's a small win. And obviously if I were to hold until market close, I think it would have, snatched 1,000% profit again. But it wasn't meant to be. I take 2-hour binary option trades. We were approaching weekly VWAP mean. So now we're sitting here in a position where, stock market's up, my own personal portfolio's up, the trade went up, I took calls. This was a great win. Similar in the sense of the last trade, this one is just, I can't really attest anything to my trading strategy other than I built a model that gave me a percentage that we're going to go up, and I took it, and I was correct, and the model was correct. And if you were to trade along with my model, you would have been profitable no matter what. In fact, if you took calls at any point in the day today, because it was so steadily to the upside, we didn't have any chop to the downside. If you were to take calls at any point, you would have made money. The only person that lost money today was the person that took puts. And there wasn't really any reason to take puts besides the gap. And this is the fun part about the model, is that as you can see, the post-market gap created from Thursday to Friday was 0.59%. That is considered a big gap up in the model. And lots of times, many strategies will have gap fills as the main proprietary variable. In fact, my first trading strategy when I started trading options was I would just trade gap fills the whole time. And I soon realized that gap fills alone do not make a profitable strategy. I ended up losing a lot of money on just gap fills. It was not fun, but I learned my lesson. And so when I made the model and I saw, big gap ups started, taking calls, I'm like, wow, this thing wants to take calls on this large gap up. And then it was correct. And I was like, what? And it's because I tacked on a lot more variables to make it more accurate, not just gap size, but also where it is on the VWAPs, where it is on the days of the week, if we're above the 9 and the 20 EMA, things like that. I started to take that into account and it started to become more accurate. And I've now created a strategy where, I'm not solely relying on one variable in a post-market, after-hour session. So that was kind of the whole entire stretch of why I did what I did on that day. To summarize it all, this week was a great trading week. It honestly probably is one of the best trading weeks I've had ever in my trading career, strictly because my break-even point was met within the first 2 days. So I could lose the whole entire month and I'd still be profitable, which is, fabulous and I love to see. And throughout, my trading career, I'm probably going to have better weeks. I'm sure as hell going to have way worse weeks. This upcoming week in February should be pretty fun and I'm excited to see what it brings. But until then, thank you all for watching if you're still watching. And hope to see you guys in the next video where I rant on about my life and my trading and, hopefully I'm making money. And if not, hopefully I'm losing money with a smile on my face. Deuces, you guys.